Hello, today starting with series 1 of 3 candlestick patterns. This is Alexis here, and I'm sharing with you a series of candlestick patterns, a series of videos that explains candlesticks. So the very basic definition of candlesticks is, if you understand candlestick pattern, it really goes far beyond just remembering and recognizing certain formations. So what really matters is that you understand what the candlesticks in front of you tell you about price structure, trend strength, buyer-seller dynamic, and the likely path of future price movements. So basically what I'm trying to say that is candlesticks actually tell you a story. What I'm going to do is I'm going to show you the basics of candlesticks and how it tells you a story, so that when you look at your charts, you don't just see the green and red the boxes on the screen. What you see is a story that kind of unfolds and how price action actually forms. So the basic candlestick, what it shows you is it shows you two things. You can see over here there's a body, and of course if this is a green bar, where it opens, where it closes, high and low. So the colors here I put are white and black because essentially the colors don't really matter. What matters is the opening and the closing price. It will tell you where is price going. So very simply on the very basics of candlesticks is, if the price opens here, closes here, you get a green candlesticks, or a price that closed higher on this day. If price opens here and closes here, what it means is for this particular day, price has moved downwards. All right, so this is the very basic definition of candlesticks. Now, what then does a high test bar and a low test bar tell you? All right, so over here, okay, so I would like you guys to think about candlesticks for now, like a ball game. So imagine there's a game between bulls and bears, right? Where buyers and sellers, in that sense. So every candlestick represents who is controlling the ball in the game. And there are 5 elements of the candlesticks that tell us who is ahead, who is pulling back, who is in control, and who has the better chance of winning the game. So these 5 elements are the opening price, the closing price, the body, the high, and the low. All right. So it's really crucial to understand that candlesticks cannot be observed alone in a vacuum. A candlestick must always be analyzed in the context of what has happened in the past. So whenever we try to analyze a candlestick or a formation, we need to ask ourselves these questions. Number one, the current candlesticks, is it larger or smaller than the previous one? The size change, is it meaningful or not? Is the change happening during an inactive trading period? For example, candlesticks on Euro Forex pairs tend to shrink in size during the quieter Asian session. This is a good starting point because it helps us avoid the closed mindset thinking, which limits many traders. So the elements in the candlesticks we have: size of the body, length of the wick, the ratio, pardon the spelling, the ratio between wicks and bodies, and the position of the body. So using size of bodies, right? Long versus short. Generally speaking, the longer the body, the more intense the buying or selling pressure. So basically, short candlesticks indicate little price movement and represent consolidation. So if you just imagine price moves in the particular day itself, it just means that in a day with a long body, what has been happening is that there's a lot of buyers. For example, this white bar, there's a lot of buyers that actually came into the market, and a lot of buyers have entered, pushing the price. So the bulls are kind of winning the game here, right? The ball is in their possession for a longer period of time, so they are pushing the price up. All right, so there's a lot of players in here. Compare it to a short body, it just means that price, not many players in the market, therefore there's not enough momentum, there's not enough volume for price to go up because price has not moved much. Okay, so this is an example of buying or selling pressure in terms of volume and momentum. Okay, when we talk about high test bars and low test bars, then why we look at it as a form of reversals, or a form of momentum direction. Very simply, if you think about it again in the form of ball games, right? So just look at this particular candle here. Price opened here, all right, and price is trying to go up, but before price went up, right? So basically, if we look at this candle at the end of the day, price open here, close here, okay? And based on your understanding of now volume in terms of it, the question is there a lot of people in the market? This is the question. All right, so it looks like there's not much price movement or not much game being played, but then look at what happens when you have the wick start to appear. Okay, so when the wicks appear, what it means is opening price opened here, and a lot of sellers, there are a lot of sellers coming into the market trying to push the price down, right? So this is the bears coming in and they're gaining control and they're trying to push the price down. But what happens is the same amount or more of buyers, the bulls come back in and says, hey, that is my ball, push the price up, push it all the way up over here. And just to show how strong you are in terms of how strong the bulls are, what they do is they push it all the way to the top and you end up closing just very near to opening price, or giving a tiny body over there. All right, so this is the way the price moves. Open, sellers come in trying to push the price down, buyers coming back to show them that, hey, you're not in control, I am in control, and price goes over here. So you can see the way the price action goes. Okay, price starts to go down, rejects off this area and moves up, which is why when we look for high test, which is why it's called a high test bar or a low test bar, right? So this one is a low test bar because sellers come in, push the price down, trying to test a low, right? Because it forms a low over here. So price comes and tries to test a low, but unfortunately, all they can do is test it, right? They cannot control it. The buyers came in and pushed the price up. Hence the name low test bar. Similarly, if you're talking about the high test bar, price opens here and a lot of buyers come in trying to push the price up, but the sellers come back and say, hey, this is my ball, I'm going to show you how strong I am, I'm going to push the price down all the way and close off the day this way. And then when you color in the body, it gives you a low test bar because a high test bar because price tested the high, but the buyers didn't control the ball at the end of the day. The sellers are still in control. All right, so this is the very basic definition of a high test bar and a low test bar. Thank you very much.